Hello everyone, welcome to Mastery. It's Rosario's Academy. There's another adjustment which we're going to discuss here is income received in advance. We have received the payment at the end of the financial year, but still its benefit is yet to be given. We haven't given the benefit for that payment at the end of the financial year. So that is termed as income received in advance. The treatment would be we have to reduce such income from the concerned income account. Okay. Take an example, commission received. Our commission received account shows 20,000 at the trial balance. Out of that, 10,000 or let's say 3,000. Out of that, 3,000 belongs to the next year. Including the next year commission also we have received. So that next year, the forthcoming financial year's commission should be reduced from the total commission received amount. Okay, so it should be deducted from the concerned income account on the credit side of the P&L, and in the same way its benefit is yet to be given, isn't it? So we have to keep it as a liability because we have received the money. So far it doesn't belong to us. Even though we have received the money, it doesn't belong to us till we offer the benefit for that money to the customer, to the person. Okay, so we have to show it in the liability side under the current liability category. Let's discuss in detail how it should be reflected. Okay, so income received in advance also belongs to the representative personal account category according to the personal account rule. Debit the receiver and credit the giver. Here we have received the money, so we have to offer the benefit, so we have to credit us. Okay, so the entry would be concerned income account debtor to income received in advance. Okay, so this is what the entry, adjustment journal entry that should be passed on journal proper. Okay, so the example here we are having the example. So on trial balance we have a commission received. The same example which we have discussed, let's here have commission received account, how much? 20,000. Okay, during the period. Out of that, adjustment is received in advance. Okay, commission received in advance. How much? 3,000. So which means that it belongs to the forthcoming financial year. So we have that amount also is included with the total amount received. Out of that, only 17,000 only belongs to this year and 3,000 belongs to next year. So it should be deducted. So how it would be reflected on P&L, profit and loss account, at the credit side by commission received. How much? 20,000. Okay, less received in advance. How much? 3,000. Okay, so 17,000 should be written on the outer column. That is how it should be reflected at the P&L. Then when it comes to the balance sheet, okay, so liability side, so this is asset side. Okay, so liability side it should be shown. Okay, so commission received in advance. Okay, so it should be the 3,000 amount should be shown under the current liability, subcategory. So that is how we have to treat it in the final account. Since we have received in advance, since we have received the next year's money also with the current year's money, it is included with the current year's commission received account, so that should be deducted. So that's why on the credit side of the P&L we have deducted from the total of commission received. So the advance received amount is deducted from the total commission received, and such amount should be shown at the liability side under the current liability in the balance sheet. Okay, so because as we mentioned earlier, the outstanding expenses, outstanding income, how we are adding, in the same way whatever that we have received in advance also should be deducted in order to ascertain an exact profitability. So I hope you have understood. Thank you so much for watching.